All right. I think we've started. So today is Friday, September 6th, 2024. Welcome to the weekly Take on the Market. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here in Investor Business Daily. It is about 11:30 my time, Pacific time. Market's still open. I have something later on today, so it was now or never for this video. It doesn't look like the market's been able to stage any kind of rally today after opening relatively strong. So I think what you see is what you'll get at this point. The disclaimer: I'm not licensed, can't tell you what to buy, what to sell, what to hold, etc. Please take a moment to read this. All right, so we'll do overall market thoughts. I think I was off last week, so I have a couple of screenshots and a couple of thoughts about the market. We'll do the normal drill, the industry groups, and stocks to watch, and then quote of the week. So I think this was a Wall Street Journal headline. Fairly certain that I saw this pop up on the Journal. And as a contrarian, I just can't help myself when I see things like this. It bothers me. I've mentioned 100 times, they're not great signals that the upside will stop. They work better the other way. I wish this said Americans are really, really bearish on stocks, and individuals are liquidating their 401ks as fast as they could. Obviously, I'd like to see them. If that was happening, the NASDAQ would be down like 35-40% or something like that. But anyways, we've been in a really long bull market. The US markets have been tremendous, like way over their skis as far as historical performance. And that's great. I've participated. I love it. It's the best place to invest. It can't go on forever. At least I don't think it can. Maybe I'm wrong. Maybe it can go on forever. I don't know. I just think history says that eventually we'll have a bear market. And so, fortunately or unfortunately, I'm always on the lookout for it because of I've just lived through a couple of bear markets that would have wiped you out. And I saw friends, traders that I knew get wiped out. Like they went down so much they couldn't come out of the hole. I know stocks come back, but maybe you don't come back. I guess maybe we'll look at ARK. ARK, the ETF could be a good example of something that it probably never comes back. It's just too far down. The math, and well, maybe if I have time, we'll go over them. The math is just cruel, and which is why I'm so diligent as best I can. Sometimes I get myself in trouble like everyone, but as best I can to try to manage that downside, because if I go down 10% in my account, I only need to make 11 to come back. If I go down 25% in my account, I got to make 33% to come back, and so on and so forth. So it extrapolates the move back that you need because the money is less. So it makes it that much harder to do that. So there's a lot of money's been made, and so I would say for me, I'm just going to be diligent about it because my experience is I don't want to be glib, but it's easy to make money. It's hard to keep it. And so that's been my stock market experience. It's easy to make money. It's hard to keep it. So keeping it is obviously fairly important, if not uber important. Another sentiment cover, the Time 100, the 100 most influential people in artificial intelligence. I'm just not smart enough to know the whole artificial intelligence thing, but I'm pretty good at history. I know stock market history. I've read, gosh, I don't know how many books I've read on markets and stock market history, hundreds. And when you get this type of fever about it normally you're near the end, not the beginning. So the fact that Nvidia is not acting that great anymore, AMD's broken down bad, and now they're coming out and telling you how influential these people are on AI. So it makes me a little skeptical as well. Same the other headline previous. All right, so it's been the start to the year from Bespoke. The S&P is down 4%, and they tweeted this maybe an hour or two ago. So the Nasdaq's down 5.5% to start the month, 4 trading days, the worst start since 2001. We all know how 2001 ended or started. Did 2001? It wasn't the beginning of the bear market, but it was more the beginning than the end. I guess the bear market was truly about March 2000 till around April 2003, something like that. So, but it was, you didn't want to be invested in 2001. Like if you thought, oh, it's a bad month in 2001, let's go in there. You know, if you waited it out, you'd been fine, but you'd have gone down a lot off the highs. So I don't know. I want to be bullish, but it's hard to be. I'm looking around for reasons to be bullish, and I'm running out of them, unfortunately. All right. This is a great chart on the levered ETFs, or in this case, it's an ETP. I don't know, exchange traded product, maybe. Anyways, this was tweeted. I don't remember, but the source is Bloomberg. And the short version, the yellow line is MicroStrategy, the stock. The black line is the 3 times levered exchange traded product to MicroStrategy, the stock. So in theory, if MicroStrategy is up 50%, this thing should be up 150%. If MicroStrategy is up 10%, this should be up 30%. If MicroStrategy is down 10%, this should be down 30%. It doesn't work that way, unfortunately. It has to do with how they create these products and the constant rebalancing, so to speak, on a daily basis. It doesn't matter that you don't need to know how the omelet's made to know whether it's good or bad when you eat it. And so these things are bad, and this is why they don't work like people think they work. At least a lot of people, professionals, understand this, which is why it's hard to short these products. You can't borrow them because the professionals, the hedge funds, are borrowing them to short them because they know they're flawed products and have a general bias to go down, regardless of what the stocks or the indexes do. And if you look at anything that's triple leveraged, look at a monthly chart. Anything, Tesla triple leveraged up, FANG down. Now, the SOX up, SOX down, and now we've been in a big bull market. So especially the down ones, you'll see how bad they've gone down because of this. So short story, that was the long story. This is the short story. MicroStrategy is up about 100%, I think, was what they said at this point. And the long triple is down. It looks like about 100% or whatever, how that could be. But it didn't do what you thought it would do if you were going to hold these. Now, if you want to trade them, that's fine. You can see it worked really well as MicroStrategy was coming out of a base in February, March. It went up a lot more. So in short periods of time, days, weeks, months, maybe, they can work. But you don't want to hold these for longer term because they have a natural bias to the downside. So like when I want to be short, let's say I want to be short the FANG stocks. I don't buy FANG down, FNGD. I will short FNGU because I don't even have to be right to make money. If FANG stocks went sideways for a year and I happen to be able to hold it for a year, it would go down. I would make money. It did, even if FANG stocks went up a tiny bit, it would go down. Now in IRAs and in tax deferred accounts, you can't be short. So I have to, if I want to be short, buy FNGD if I want to. But I honestly, I'll hold these for a day or 2 or 3. Very, very tactical on them. Just like a hummingbird would eat at a bird feeder. You know, come in, eat a little bit, and then go away. Just like very protective of it. All right. So that's that. Let's get into the indexes. I'm going to turn my camera off so that in case they cover the chart. All right, so let's start with the NASDAQ. And I don't know. This normally I'd be very, very bearish here. I don't know what is keeping me from being very, very bearish. I feel like it could be a bear trap. Like this looks like we're heading to the lows. So a bear trap would be something that did like that. But each day I'm becoming less and less enthusiastic about a possible bear trap. But who knows? Let's see. Maybe it opens down Monday again, like this. This was a Monday. If we do something like that, open here and then rally again, that would be very bear trappish like. And so maybe you could get some kind of rally. But I'm not sure this peak is not going to be the peak for a while. I felt like the S&P was going to make a new high, and it just missed, and it still might, but with this action, I don't know. We'll have to see. I'm less enthusiastic about that scenario. So as we sit here, you just have to kind of play it close to the vest, unfortunately. I don't think there's any point in guessing that it's going to be a bear trap if you want to be long. If you're normally like a buyer of stocks, I'd be down to like one or two of your favorite names properly positioned. What does that mean? You know, a 10% position in one or two names. It's kind of what I'm at. I'm positioned in one stock long, and I covered a lot of the shorts that I had today. So far poorly. I covered them poorly. They're a lot lower, but I do have a single short, but I'm net long. My short is not that heavy compared to my long. But when I say net long, I mean I have like a 15% position in a stock, and I have an 8% position in a short, and the rest is just in cash. I just don't see any edge here on either side at this point. Let's look at the Dow. Now, it did make a new high. So you have, so far at least, a negative divergence. One of the indexes made a new high without the others. And it's a lot kind of how stocks tend to top, or indexes do. From how about gold? I think the problem with gold I've always had is like it act good, and then it doesn't. And if the market gets in trouble, they will run to anything that's up and just start selling indiscriminately. And so gold will probably go down if the market got into something like that. Things you can watch, like from a macro standpoint, like if there's a really like a problem in the world, like a big bear market type problem, or is this just the fact that we're just going through some kind of valuation squeeze because stocks are overvalued, for lack of a better word, and you get like a normal correction. But junk bonds, high yield bonds will not be at all-time highs pretty much, and this is an ETF of it, if there's problems. So they will go down. Like if you go to, so let's do the monthly. So this is the financial crisis, right? You can see they went from 144 down to 80. That's a tremendous amount for something like that. This seems unlikely. I think the backstop of what the Fed and everybody will do is different now. That seems unlikely. But if it starts to go down 10, 12, 14%, that would be a lot for this, and that would be kind of a clue that maybe something's wrong. So JNK or HYG would be your proxies in that regard. The old yen carry trade, if you're interested in that at all, you've got FXY, which is the single Japanese yen. Now, if this was a stock or an index, what would you do with that? I think, that looks very buyable, longish, like really strong. Like I would want to be long that. So that tells me in that case, this is probably going higher. And if this is going higher, based on what happened previously, maybe that means stocks are going lower. Now, could it change? Sure. But that's kind of what's going on there. YCL is the yen carry long twice. So it's a double up, and it looks, it should look pretty much the same. It does. The YCS, which is the short one, you can see how this was a good trade for me. I didn't hold it super well, but I think I honestly can't. I don't know if it was this run or this run where I actually owned it for a while, but you can see how it's been it goes on these little runs, and then it's broken now, but it's gone up pretty, 40 to almost 100. So the yen has gotten killed. If you look at a monthly of FXY, I think it's 100 down to 130 down to 57-ish, 130 down to 57-ish, 56% the currency. It's a lot. Imagine if the US dollar went down 57% over a number of years. It's a long time, right? This is over 10 years, but still. So that's that from, if you're interested in that macro trade that people, everyone wants a reason why the stocks are going down. And sometimes I think, it doesn't really matter what the reason is. In fact, trying to find the reason or knowing the reason could prevent you from doing the right thing. I think in the end, you just follow your process, follow your rules. Doesn't matter why VST went down. It went down. I had to stop myself out. End of story. And so that's how you handle it, I think. All right, let's jump to industry groups. I'm going to spend very little time here, I think, because I like to talk about a lot of stocks. I don't see any real story here. Beverages, non-alcoholic, ideally or normally that would be very defensive group. Number one. Steel specialty alloys, only 11 stocks. CRS has held up really well. Medical long-term care has done okay. Food, dairy products. Would that be growth oriented or would that be defensive? You let me know. Insurance, they've just been doing great. All the reasons we all know. If you own a home and you have to insure it, or if you own a boat, if you own anything, probably you have to insure it. Tobacco. I mean, is that defensive? Tobacco, oil and gas royalty, hospitals, gold, silver, banks, utility, electric power. Where's semi? Where's software? Where's the typical growth stuff? It's not in here. So I think the industry groups are kind of telling you a little bit about the makeup of the market as we sit here. One last thing I want to talk about on the market is it, and let me Vanguard total world index. So here's the Vanguard total world index, and I don't think we would have the information, but the last I heard that it's the ACIW or something like that. It makeup and the US is like 70% of all world stock markets in this index. So it's just way over its skis as far as like the value guys. Now, the problem with that, they've been screaming that from the rooftops for 20 years or 15 years, and it hasn't done them any good or done you any good. But at some point, maybe it does matter. So it would be very interesting to see, like, if the US started to roll over, but maybe you could make money overseas and stuff. So like, here's Indonesia. And if you do a comparison chart versus like the QQQs, you can see it's just been beating the pants off of this thing for like, let's just go back 10 years or whatever. Look at that. Just incredible performance. But if you look at it recently, it's what they would call alligator jaws. And so like stuff like Mexico, and here's the Philippines, EPHE, EWM, is that Mexico? That's Malaysia. So look at Malaysia. Now, I don't know if I'd ever buy Malaysia. What do I know about Malaysia? but it's just like a mindset of where money is flowing, and it's actually outperformed the NASDAQ this year. It's up 18%, NASDAQ's up 9%. So you could dump a bunch of stuff in here and kind of get an idea on just kind of where money might be flowing in that regard. All right, apologies, I got off track there. What did I want to? We did the industry groups. So I guess we can jump to stocks. So let's talk about like ARK. Let's go back to that kind of thought process. So there's the high right there. And it's what, 160, and now it's currently roughly 45 or 140. Geez, 160. Now you could argue that the 160 was kind of an artificial high, but if you owned the thing, you could sell it there if you're 150 or 140. So it's down a lot, 75%. So if something's down 75%, how much does it have to go up to get back to even? So if I have if I turn $100,000 account into $25,000, how much do I have to go up to get back to my 100? I gotta triple that, right? There you go. I gotta make 75,000. And you see how hard that is. So that's why protecting what you have is so important, because the downside is so brutal to coming back. At some point, there's like a Rubicon that you cross where it's just almost impossible to get back. You go 50, 60, 70%. You just can't get that back. So you just can't allow that to happen. You have to be diligent about it. And some of us might be too diligent, like cutting too quick, not to get stocks room to breathe. I that's a fair assessment sometimes of my own trading, I feel like, but because you can, the old death by 1,000 cuts. But I think I'd rather do it that way than this way. If you owned ARK, sorry, I mean, look, I don't have a crystal ball, but it's just not going back there. It's just not. At some point, they'll just probably pull the plug on it if it's can't generate any alpha. And I've seen the AUM is really starting to finally flow out. People have finally started to say uncle and something like that. All right, so stocks to watch. I can't tell what ticker I wrote down here. That's oh, maybe it's well, let's start with like the FANG stock. So here's Meta, and it's actually holding up pretty well. Like if you forced me to own a FANG stock or a Magnificent Seven stock, this would be the one I would own. It's actually holding up really well. Tesla tried to go up today and just couldn't take it. It's having a bad day all of a sudden. It is building a pattern. So maybe it's not game over just yet, but today's action's discouraging for sure, I would imagine, if you owned it or bought it yesterday. Apple holding up okay. It'd be second place to like Meta. Nvidia, and just it's just getting a little wide and loose now. So it looks like if I go to weekly, it might just need some time. or it's topped. So if you own it, you have to say, well, if it needs time, great. Maybe 6, 8, 9, 10, 12 months from now, it gets going again. Or what if it topped and never gets going again? I don't know where to put this stock in that type of bucket. But I would say if it builds a base, starts to right itself again, you can always buy it back. You can always get re-involved if you want. This is another kind of canary in the coal mine stock that you can watch. SoftBank have a lot of investments in high-tech stocks. And so this is something you could watch if there's going to be like any kind of problem out there or whatever. we never know what it is. Like everybody's looking for this like black swan, right? And the idea behind a black swan is you don't know what it is. That's why it's a black swan. So yeah, the Taleb, the guy who wrote the book, I always see, if I see an interview with him or I see him on in a podcast, and he gets upset when people say, "Well, what's the next black swan?" And he would say, "I don't know. That's what makes it a black swan." So I don't want him to get mad at me if he somehow stumbled upon this, but this could be, it would foretell that maybe something is wrong in the tech area. So this is something you can just watch. But boy, it sure doesn't look good as we sit here, right? SMH. Now, I don't know what to make of kind of these old school technical setups like cups with handles and triangles and pennants. But if you find any value in them, this looks like a cup. This looks like a Head and Shoulders top to me. Now you have this kind of weird spike right here. Normally it wouldn't do that. This would be like, this wouldn't exist. And this right side would be a little further pushed out, I think, if I'm interpreting how I keep saying how a Head and Shoulders top should look. But everything is just is accelerated now. So maybe this is the new Head and Shoulders. So I'm been pretty bearish on this. I did cover today because, it's been down 7 of 8 days or something like that. And it just feels long in the tooth here. If it breaks wide open, I'm just not going to be there. It is what it is. But I will, if it goes back up again, I will try it again. I'll short it again until it finally breaks above the 50-day and stops me out. Just keep playing that game. If you go to the weekly, you can kind of sort of see the same thing. If you go to the monthly, semiconductors, I'm not an expert on the business, but they used to be cyclical. And they used to have booms and busts. And this has been a tremendous, tremendous boom. From 10 to almost 300 on a semi-diversified ETF. It's been an amazing run. So they deserve to have a bear market, have a shakeout, have a correction. It's not unusual for that to happen. Okay, semiconductors. Avago or Broadcom, AVGO is the old ticker. So they announced earnings, and that was kind of a catalyst for the weakness in the group here. All right. So those are the bad ones. Well, let's get to a couple of other bad ones. So VST. This is a stock that I was in, double bottom, shakeout +3. I really thought it was going to get going. I really liked it there. But then if you see, was it Monday? It went from 85 to 81 in 40 minutes, and it's like, whoa, something's wrong. So this is very difficult to sell when you watch something go from 85 to 81, but you got to do something. So if you have 1,000 shares, sell 100, sell 200, sell 300, just get in motion. Oh boy, I should have sold more, sell another 100, sell another 200. Oh boy, I should have sold more, sell another 100, sell another 200. Now you got maybe half your position. Oh, good, it's bouncing. Boy, that didn't last long. Sell another 100, sell another 100. Pretty soon you're out. Ideally, you just, puke it all quickly at 83. That's hard to do. It goes down pretty fast. And, it survived this little shakeout, and it survived this little shakeout, and survived this little shakeout. So you always think, well, maybe it's just going to shake out again. But this time it didn't. So it just didn't do what I thought it would do, and end of story. I have to move on. So I don't own it. And really, honestly, I just don't envision myself buying it back unless it somehow did that over a number of days to weeks. It's not impossible, but it looks like that story is over, unfortunately. CEG, I wasn't in this one. I wanted to be, but I wasn't in it because I had a large position in VST, and to me, they're pretty much the same. But if you were in that one, same story. It's broke and just there's no bounce. It just cannot rally. Coherent, I was in that one, and that was the same story that day. Not as bad as VST, but bad enough when you have a large position. So it was down 8%. What was VST down? Almost 8%, maybe 10. Wow, 11 and change. Those are really bad days. You have to do something there. Something, when I say at the bare minimum. Ideally, you just so my philosophy is they can get me one day, and it was a bad day for me in the market. I'm not going to sugarcoat it. I had one stock was up. So I had three stocks. This one was up, but I just sold it because if it had turned back down, I would have had a really, really bad day. So I did the, quote unquote wrong thing. I just said, get me out and just be done with it. But so they can get me on one day, but it's really hard for them to get me 2, 3, 4 days in a row because I'm just going to get out if I have a bad day and reevaluate. I can always get back in. And that's part of the digging out of the hole process. I go down 4 or 5%. I can get out of that, make 5.5% and back to even. I don't want to go down 15, 20, 25 if I can help it. It's just too hard to get back to those old highs. So that was those three. C Limited is, or I keep calling it limited, but C is the only stock that I own currently. And, I'm holding on by a thread. I really don't want to sell it, but again, the market is very, very heavy and might force my hand here. I like the overseas. I like the business. I like the company. I've done really well in it before, so I have a soft spot in my heart for it. Honestly, it was my Tesla in this bull market. No, I didn't buy it there and sell it there, but I did pretty well with this one. So keep that in mind, and why I might be mentioning it because maybe it's a pet stock. I don't know, but I do see that it's holding up well technically. The relative strength is getting a lot better. It's at intermediate term highs, but you have some sponsorship, which I like, and that Contra has built a position in it. Is it a big position? No, it's 450,000 shares. But that's his starting position, his probing position. And if the company starts working, if the stock starts working, or I imagine ideally in a perfect world, it would be both, right? It'd be the company's hitting on his metrics he wants, and the stock is acting well, and he'll just keep buying. He'll just keep adding to the stock. So if you go down here, you can see some other companies that I've flagged, like Bailey Gifford is another fun company that I like to follow. They did really, really well in Tesla. They knocked it out of the park on Tesla. Like bought it right, sold it right as best you could as a mutual fund. In other words, they grabbed a really big chunk of that move in Tesla, the whole move. So I feel like that's, maybe it was luck. I don't think so. It was impressive. So I like to see what they own. So I've got sponsorship is the bottom line. So that's what makes me very, very interested in this name. What you can do, like if I go to Bailey Gifford International Growth, this one, and go to holdings, you can see fairly quickly the stocks they own. And so it's another little, ASML. Is that a good stock? Maybe not right at this moment, but that's been a great one. Mercado Libre. Wow, it's been gangbusters. Spotify doing really well. Oh, Taiwan semi. Ferrari race doing great. So they seem to be pretty good stock pickers. These are stocks I've either owned before or would consider owning at some point. So I like that, gives me a little bit of an insight into their style. So that's another reason why you would use them as sponsorship. Let's go to the other Bailey Gifford GA. I don't know what the GA stands for, but it looks like it's pretty much the same types of stocks. So that's how I will handle sponsorship. I'll also look on the internet for 13F filings, see if there's any, like Duquesne Capital, Stanley Druckenmiller, does he have a position or something like that? I will do that as well. But this is kind of your quick way to determine sponsorship. Okay, so SN Shark Ninja acting good. So reached the 20% profit. If you bought the breakout and you got the pivot, you're up 20%, or at this point 17. It's giving back. Really hard to know what to do. Maybe take a little bit off. There's no rule says you can't do that in this day and age of zero commissions. So much easier to just take a little bit off. I know the tax implication thing. Well, I have non-taxable accounts, so I don't have that problem. But in a margin account, I know a lot of people think that way. I just have never thought that way. Maybe I should have, because I've paid a lot of taxes in my margin account through the years. Maybe I should have been more cognizant of that. But I just was, when I read Bill's book, he was like, don't worry about the taxes, pay them. And if you worry too much about taxes, maybe one day you won't have a taxable problem because you'll let the stocks go down too much. So I just kind of fell into that philosophy. But I do scream from the rooftops about non-taxable accounts. Like, to me, the Roth IRAs, there's probably like, if there, I'm not exaggerating. If you forced me to make a list of the 10 greatest investments, or I'm sorry, not investments, inventions, for lack of a better word, the Roth IRA would be in that top 10. Air conditioning, the wheel, etc. So I just think there's the fact that you can accumulate money, and unless they change the rules down the line, and not pay any taxes on your gains is astounding to me. So sorry, I went off on a tangent, but I don't know what it is. I just believe wholeheartedly in that. Kava. So to me, Kava and Melli are the two best stocks in the CanSlim, TML, model book, whatever you want to call the great stocks. They're the two. As much as I'd love to say Sea Limited, it doesn't have the fundamentals that these have. So admittedly, it's Kava and Melli. And Melli's having not a great day today, but look, the volume is just pathetically low and the market's really bad. So this stock's holding up really well. So Kava and Melli, like if we were to get like some kind of change in the market environment and turn into a new uptrend, I think these two are the leading stocks as we sit here today. Okay, that's it for stocks. Let's talk about the quote of the week. And I had a few I was going to do. In fact, I had another quote I was going to talk about. I'll save it for next week because I felt like, oh, this one is more relevant. So as much as I wish I had like these hard and fast rules on why I do things, sometimes I just think it's a bit instinctual from sitting here all this for years and years and years and just observing. And I can't explain why I do something sometimes. I just do it. But this is a great quote from Scott Bessent, Key Square Group. He worked with Soros and Druckenmiller for a lot of years. He was on the team when they shorted the pound. So, but he says, when he was asked this kind of same question, he said a lot of it is P&L, profit and loss. A lot of it is technicals. I definitely look at that. Things that aren't supposed to happen are starting to happen. If we're in a bull market, if things are going good, my two biggest positions shouldn't be down 10 and 8% respectively on a single day. Not unless I'm up 40% in them. That could happen. But when I'm only up 12% or something like that, I'm going to give, and they go down 10, that's all of it. And then some so that's not supposed to happen. So that's why I might, be reducing the portfolio. And it's P&L sometimes too, just strictly if the number's moving in the wrong way, I will start to move to get out, to move to the sidelines. Just something as simple as that. So I don't always have a explanation for like, oh, it's breaking the 10-day, or it's the 10-day cross below the 21-day. A lot of people want rules like that. Great. If you have rules like that and you can follow them, no problem. It's not that it's wrong. I just don't use that stuff. I don't know where the 10-day is on Sea Limited. I couldn't have the slightest number where the 21-day is. Kind of usually know where the 50-day is, because that's kind of a magnet to a stock that's trending. As it gets too far away from the 50, I might want to be trimming. As it gets closer to the 50-day, I want to be evaluating whether it should be kept or maybe added to, things like that. But yeah, sometimes it's just that simple. The account's going the wrong way. Time to protect. Start doing some selling. All right. I appreciate it. 800-831-2525. Have a good weekend, or marketsurge@investors.com. You can email us. I will be back next week. Have a great weekend, everyone. Thank you.